So does anybody have any questions that he wants to, anything about the okay, the question that Dennis is asking, when do we add to our existing positions? Right now, just I'm going to repeat this because the guys that are not in now, okay, hold on just 1 second, he's having a problem to get in. Question that Dennis is asking is, how do we add to the position, and when, and by how much? Now, as you all know, I'm just going to do this repetition so that the guys that are going to watch the recording can see. We have been taking the long positions now, the dollar yen, from what date is it? Let's go to the radar screen. We are long the yen pairs, all the yen pairs from, or technically this is the key, Dennis, this is the key now to what I'm going to say, is that we're supposed to be taking the trade, or you guys should have been taking the trade from that time. So from the November the 15th, November the 20th, the Swiss yen, November the 16th, the Aussie yen, November 16th, the CAD yen, the New Zealand from the 21st, and the pound yen. Now, taking those 7 positions, technically we are up about 1,000 pip on a position. So, of course, and looking at our charts, like I've been telling you this morning, we do have now a bona fide bear market in the yen, and we need to capitalize on it. And once we have a bear market and we're already in the trade and we're making money, now we need to add to our position. So there are addition rules. There are rules that we need to know in order to add to our position. The first thing that we know, we have to be starting correct. So the start of our trade should be correct. So basically you're starting the trade by taking one or 2N. I mean, let's say that 1 or 2 units. So you have taken 2 units. So this means you're risking. So your risk now is, your risk is equal now to, initially when you started, to be 4% of your equity. Why? Because your N, each N is 1%, and you're taking the 2 ATR, so on average it's 4% of your equity. Okay, so now once your equity increases, your equity goes up by 2N. So now if you started your account with 1,000, that's your N. So once your account goes up your whole equity, not the money that you have in the account, your equity, your original equity goes up 2%. So if you started with 100,000 and you put 1,000 in the trade, and now you are up 1,000, so your gross equity now is up 1N. Okay, it's better if it goes up 2N. So let's stick when it goes up 2N. So now you started with 100, now you have 102. Not 2% on your position. 2% on your position would be this here. That will give you 2% on position. You want to be adding somewhere around here. This is where we started, so we want to be adding somewhere around here. So what you do now is this. When you have your equity goes up 2%, you are going to, you can buy 1.5 units. You're going to buy a 1.5 unit, or let's say you can buy, let's say, an additional 2 units. I don't want okay, let's leave it at that for now. It's not exactly correct, but that's it. You can buy 2 units and move your initial stop up by 1N. So so if you're going to add, basically the way we add our positions should be like this. Pyramiding should be like a pyramid. So our biggest position would be the initial position, and we're going to add less and less and less. So right now we can start, you should be starting, let's say, with the 5N, then you add 3N, and then you add 2N, and then you add 1N. And every time you add a position, you are moving your initial stop up by 1N. So by the peak here, at the peak when you have the full 5N, your stop, you have protected your stop, and you're only risking on the open market, you're in the 2N. So by the time you add the 4th position, you you will be, you've reached to cover the 2N and then cover the other 2N. So eventually every time you add a position, you are raising your stop up until the final position when it gets to the peak, which is the one you have. All this distance from here is protected because you're moving your initial stop by 1N all the time. Okay, we have a spreadsheet also for the pyramiding. So you will put in your position, it will calculate for you your equity, and it will tell you now you can add the 2% and move your stop to this point. And this is the one that we gave to the turtles, but I didn't send it to you right now because I was waiting until we have a situation like this that we all have those positions into the trade. But initially for you, if you have an open position, raise your stop up by 1N and add another 1N as a new position. Okay? Now, we have been all over weekend from the Sunday session, we have discussed the currencies, and we have identified the trends, and we all know that the trend now is up in the US dollar, and it is up in the New Zealand, and it's up in the CAD, and it is positive to slightly neutral into the Australian dollar, and then slightly negative or weak. The euro and the Swiss are slightly weak, and then finally the weakest one is the pound. And this is why Kishore, also you'll find that the euro and the pound already have sell signals on your radar screen. There is your pound dollar, is a short on your radar screen. As of yesterday, that was a short. And the pound New Zealand is also a short from yesterday. And what else? These are primarily the ones that from the majors that we trade. So and we also have the Euro Aussie and the Euro New Zealand also pushing down. So basically that is the currency. So now if you have already the pound yen long, then you can't take the pound New Zealand short unless you have two different accounts. So you can take the pound New Zealand in one account, and you can take short, and you can take the long the pound yen in the other. But in the same account, you'll be long the New Zealand yen. Or you can take the New Zealand yen if you don't have it, and you can go short the pound yen. Okay? So these are the currencies, and we don't need to reinvent the wheel. We have the structure points on the radar screen. We have the structure points already here. We have done that on Sunday. So we don't need to repeat or waste the time in doing that. So now we're going to look at the rest of the commodities and the current and the rest of the so let me put the indices up. Do have right now some very good trends lining up in the futures markets, and if you see here, you can see that, for example, the S&P, let's take a look at the indices. For example, this is the S&P. If I put the weekly chart, we are now trading at 1458. The structural point over here that we actually began with the bear market in 2007 was around the 1450. So now coming above this point is actually a sign that this bear market is finally over and we're going to look for a new leg up in the S&P, and we're looking for a big momentum to the upside. New highs, it might go up to the 2000 or the 1750. Having said that, just bear in mind that for the next several weeks we're going to have this tug of war between the Republicans and the Democrats about the so if you decide to take the break above the structure point, and then you can take it, but the move will be slightly zigzagish. I mean, you're going to get a push up and a pull down, a day up, a day down, simply because this tug of war, they don't know which way the market is going. So for us, you are going to take it, you're going to put your 2 and stop, and you're going to stay with it. And your break, I can see it on TradeStation here. Let's see if I can have it on TradeStation. So if, let's see if we have a buy signal on it. There you go. You already have a buy signal on the S&P, which is from 1446 about 4 days ago, and this is also quite a narrow range, so it should be reasonable. I mean, if you wanted to add to the position, and the future contract would be in the future, so we can see you already have the buy also on the future, which is 1446, the same buying price. So you can be long the S&P, you can be long the Dow. Also the Dow is giving us a buy here, actually a buy cover and reverse at 1336, 13365. So it's about 35 pips away, so it's not far away. I mean, we're close to the buy signal on the S&P and on the Dow. Let's see the Nasdaq. We also have a buy system on the a buy signal on the Nasdaq. So all the U.S. stock markets, you do have buy signals on all the United States markets. You can also, let's see on the other chart, we can see the FTSE and the other ones. Let's see the Russell here. The Russell also is moving very nicely to the upside. That's actually broke above this high. So the Russell is actually the first one that broke, and this is an index of 2,000 companies, so that's pretty good. These are all very good technical signs. I mean, the only thing is we just hope we don't get a turtle soup on those, but they are quite, I mean, if you look at the chart structure, that is quite strong. I mean, look at the price acceptance zone. This is for 2 years now, from 2011, and going through all this, making higher lows, higher lows, higher lows. So this is actually pretty impressive. Okay. So all the stock market, and they're all in LMAX. You have the S&P, you have the Nasdaq, and you have all of them in LMAX. Okay. And you can do them as a pound a point and stuff like that if you don't want to take the S&P large, because they're quite volatile. especially with the political upheaval that's going on, but it is doable. Okay. Now let's look at the grains. The grains is very, very, very interesting, in particularly the corn and the oats and the wheat. If you look at the corn, your structure point is right there, and this is a double structure point, so that is your structure point, and we have now broken below that structure point and with momentum. So we're trading now at 692. We definitely can take a short, and you're looking for a big move to the downside. In the corn, we're definitely having now the beginning of a bear market. Now, having said that, on Friday, the day after tomorrow, there is the grain report, the USDA grain report. So the USDA grain report is coming up on Friday, and based upon the data and statistics, they're looking at, let's take corn. Again, I'm just showing you this so that you don't, again, we just use this as an indication. Oh, come on, what this did. Anyway, you can check it. I read it on the other computer. The average yield that they're looking at this year is about last year was about 8 billion bushels of corn been produced. This year they're looking at about 14 billion, so they're looking at about 50% actual additional crop to be harvested. And of course, if that is true, that would lead to quite a big bear market on the corn. So you can begin to see the hints here of this. So technically we can take a short right now. You can take a mini short. If you want to wait until Friday 10:30 Eastern time to make that decision, it's up to you, but you're looking at the beginning of a bear leg. Probably it should come down towards the 550, should come down towards the 550 level. The oats is pretty much the same. You can see the structure point right there around the 360, and it already sold off. It's beginning to have a bigger leg down, so you can also look at shorting the oats. I mean, all the grains now are turning into turning bearish. The big ones is corn, the second one is oats, the third is wheat. And again, and Survey and Dennis and Kishore, you need to be looking at these when they break. I mean, if you put the stuff on your, you would have been short now. There is a buck here. I mean, this is, you would have had a signal right there at the beginning of December, right after I took the holiday, and that is a dollar move. That in one contract, that is $5,000. $1 a bushel in one contract of wheat, or one contract of corn, or one contract of soybeans is equivalent to a $5,000 move. And as you can see, just looking at the chart, it is identifying the structural point is literally a no-brainer. Okay, that is the wheat. So again, you can take it short. In addition, that we have the dollar now is also strengthening. So when the dollar strengthens and we have the oversupply that's coming in with regards to the production, that is actually double quite strong. I mean, that's additional incentive for this to decline. And if this comes down, you're looking again to a move towards this same old congestion here around the $6, because there is nothing here but air. I mean, this one, but there is nothing but air over here all the way down to the $6. Okay, that's so the first one is corn, the second one is oats, and the third is wheat. The fourth is the soybeans. The soybeans is not as weak as the corn because we're sitting at the structure point. So unless it takes out this low, we don't want to short the soybeans. Right now we're sitting at the structure point, and we broke below the structure and there was no follow through, so I'm not going to short it unless it takes out this low. Okay, the soybean meal also, that is much slightly more negative. And if you want to look at the soybean oil, look at this. This is in a sideways pattern with a bearish slant. I mean, this is your structure point. You had the break. Now it's doing a price acceptance, but it is still strong. And why? I mean, the soybean is a complex. Soybeans, soybean meal, and soybean oil. It's three things. So they take the soybean, they crush it, they get the soybean oil, and we as human beings, we use the soybean oil for our food. And the soybean meal, they give it away to the as an animal feed. And the farmer has a choice between soybean meal. When they do the animal feed, they mix it soybeans, one ratio or 1 part soybeans and 1 part corn, and then some wheat husk and stuff like that. But the source of protein that a good source of the protein and the carbs that the animals would get is from the soybean and from the corn. Now, how much soybean meal they put into the animal feed, and how much corn they will put into the animal feed, is a function of the price of corn and a function of the price of soybean. And that's, you see, the price of soybean oil is kind of neutral because, again, there is a lot of consumption by humans. But if you look at the soybean meal, you can begin to see the weakness, and this weakness is because again, they're expecting that the price of oil, corn to come down, and therefore there is a chance for the soybean also, the soybean meal, the soybean meal to follow suit to the downside. Okay, so we're looking at the soybean meal as a short, and depending on how big the number in the corn, the soybean meal will follow. Now, if it's up to me, we can technically, if we're going to forget about the USDA report, and we're going to trade like I have been training you. And the way I train you is that people do not wait for the news to actually buy or sell. So people are not sitting now waiting for the news to be bad about the until they begin to buy or sell. Now they are beginning to discount, and this news, if it's going to be as bearish as expected, then it probably the corn is going to open limit down, and it will be very hard to get into the trade. Now you can think about it if you want to take a mini or you want to take a risk. Again, it's a high risk kind of a venture. You can try a small mini in the corn or in the soybean meal, either or, on the short side. Okay, but if you're going to wait until the news, then we'll try to see if we're going to take it Monday, because we don't know how many limit days down this thing is going to open. Okay, anybody has any question about the grains? I will go to TradeStation now to put the metals, the gold and the silver. I don't have platinum on TradeStation and copper, so we'll do the platinum and copper here. Platinum is a very big contract, and it's heavy. I mean, and it's quite volatile. I don't see really a very strong setup here to take it long. So if there was really a good setup, something like this, we would have taken it. But right here, I mean, it is strong, it is going to the upside, but maybe when it gets up to the 1650 or something, we can take a gamble on it. With regards to copper, copper is in a sideways pattern. All the precious metals, all the gold, all the silver. The gold is in a turning round, and we have a structural failure now to the downside in gold, so it could be bearish. I would take another look at it on TradeStation. This is copper. It's also a structural failure to the downside on copper. On silver, I mean. So we have a sell signal on gold, we have a sell signal on silver, and we are pretty neutral to copper. So the two precious metals are down. Copper is neutral, and platinum is kind of neutral. So there isn't, if you want to look at, what is my gold here? Okay, so we can look at the gold index. Guys, I need to take this call. I'm sorry. Can I call you back? Can we log in 10 minutes? Hello? Oh, hi, Will. How are you? 1 second, please. Good, 1 second. Guys, I have to take this call. I'll call you back in about 10 minutes, okay? I'll call you back. If you can stay in the room for 10 minutes, I appreciate it. Okay? Thanks. Does anybody have any questions about that stuff before we call it a day? So again, gold is short, silver is short, corn, wheat, oats, and soybean meal are short. S&P, Dow Jones, and Russell 2000 are long. The yen, every single yen pair is short, is long. I'm sorry, take every single yen pair as long. Long all the yen pairs. And you can be short the pound New Zealand and the dollar New Zealand. Okay. Anybody has any questions? Yeah, I have the documents about the other position. I can send you a copy. You want to look at sugar? Okay. It is a short survey. It's definitely a short, and this here would be your stop. Coffee is steadying up, so we can take the coffee later on to the long side. But sugar is you can take the sugar short, and your stop is going to be pretty much above the 19. So even if you do a 2N stop, your stop is going to be above the 19. Okay? All right? Okay. All right, guys. So let's call it a day, and I will see you tomorrow bright and early, and we'll have this recording on the website shortly.